Hey guys, Dave Keller here with Market Misbehavior. I was thinking about early on in my career, I was with Bloomberg in New York, and I used to travel around to a lot of trading floors in North America, some South America as well. And my job essentially was as a technical analyst was to meet with different traders, salespeople, brokers, analysts, portfolio managers, and help them use technical analysis more effectively, help them make better decisions using charts. And, it was a lot of just seeing what people were doing, teaching them new techniques, answering questions about what they were doing, but in the end, just trying to understand what questions they were trying to answer as investors, as traders, and then focus on how the technical toolkit, how charts could help them better understand the market environment, better understand investor psychology and all of that. But what's funny is after years of going to a lot of different trading floors, I just ended up with a lot of great little examples of life lessons that I thought would be interesting to share. So my first lesson from the trading floor is really telling you how to relax, adapt, and simplify. All right, so we're going to get to my story of from an undisclosed trading floor in downtown New York from years ago. It's probably the early 2000s. Before we get to that, I just want to remind you, if this sort of thinking of investor psychology, decision-making, routines, processes, and investor behavior is of interest to you, please hit subscribe for me, give the video a like, put a comment below. Tell me which of these three, relax, adapt, and simplify, you feel that is easiest for you, maybe which one is most difficult for you, and why. Here's the story. I was on a trading floor, and this period, I had a running meeting, and I think it was about once a month. I would go to the FX trading floor. Actually, I think it was the equity trading floor at this one bank, and I would go there once a month, 7 a.m. So I would take a cab down from our apartment in the Upper West Side, go down there and meet a group of traders on a conference room right off the floor, and a big trading floor in Manhattan is it's like a warehouse, just rows and rows of desks. Everyone there, doing their thing. A lot of different groups. Every group of people, every couple rows would be a totally separate thing. So there'd be different asset classes, currencies, commodities, interest rates, bonds, equities, etc. Depending on what type of floor you're on. So we had this standing meeting with the equity traders, and it was sort of whoever could get off the desk at 7 a.m. would come in, and I literally had about 10 minutes of time to talk with them. And if you have traded, or if you know traders, or if you've been on a trading floor, you understand the incredible ADD, the attention deficit disorder that defines the behavior of most traders. It is I always talk about the markets being the flickering ticks, and people are just running around, talking quickly, moving quickly, looking quickly, everything's quick, and you literally would have split seconds to grab someone's attention and help them, and then I'd be moving on. So my meetings with a lot of the traders would be moments, if not, minutes at the most, and then I'd be on to the next person, because that's all they could, I think, handle before they had to get back to some movement in some market. So this was a chance to get everyone off the desk and sit down in a room together and talk about a particular technique. So I had my laptop, and this is, early 2000, about 20 years ago. So laptop at that point is pretty much a brick, and internet connections are non-existent, if really meager. I think I was using like a little, probably a little plug-in to get on the cellular network, I want to guess. But long story short, got in the conference room, tried to set things up, and it just wouldn't work. And I got there about 10 minutes before I was going to start, which usually is plenty of time to pop open the laptop, get ready. And for some reason, just nothing was working. And if you've been in any sort of sales demo, when the technology doesn't work, it's so deflating. So you sit down, you have limited time to get this set up and have it running. I'm trying to plug things in. The screen wouldn't work. My laptop wasn't bringing up the right program, so I'm trying to reboot it. And things took, minutes to reboot at this point. So then all of a sudden I'm looking at the clock, it's like 6:59, people start, opening the door, people start coming in, and I'm just like, this is a nightmare, you gotta be kidding me. So I spend about another 30 seconds as people coming in, joking with each other, sitting down, and I know in about a minute, they're all gonna look at me and be ready, and if it's working, great, and if not, they're gonna be like, I'm out, and just walk right out the door. So I kind of looked, I took a moment, and I take a step back, and I looked, and I said, you know what? This is just not happening. The laptop thing is just not happening. I had a whole set of like 20 charts to show people. I was going to teach them about candlestick analysis, which is a technical strategy where you look at particular shapes of candles. It's from Japan hundreds of years ago. And I was just showing them some quick ideas of how to use that in their trading that day. And so I had this whole thing worked out. I just had to scrap it. And at the last minute, what I did was I go into my suit coat pocket because I'd gotten a coffee downstairs and I grabbed a napkin from the Starbucks or whatever it was. And I just got out the napkin and I started sketching things. And I basically did this. And I said, all right, everyone, you know what this is? This is called a hammer candle. It happens at the end of the move. So the market comes down, there's this pattern, and then the market tends to go up. This is what it means. This is what it looks like. Here's what it's going to look like on the chart. Here's what you do. And I said, all right, here's the next pattern. And I drew this. And I said, all right, this is called a bullish engulfing pattern. I went through this process of maybe 4 different patterns. I literally drew it on a napkin. I held it up, showed it to them. I'm like, this is it. This is what it is. This is what it means. This is what it's going to look like. This is what you do. And over the course of about 5 minutes, I got them all to draw these 4 patterns on a note piece of paper that they all had. They each wrote them down, and I said, "That's it. Go ahead. Thanks so much. I'll walk around, and if you see examples of it, let me know. I'm happy to answer any questions." They all walked out of there. I'm, of course, just sweating, thinking that was the worst demo in the history of demos. Like, that was the worst. I literally couldn't get any of the technology to work. I drew on a cocktail napkin or coffee napkin, I guess. That was brutal. Like, that had to be the worst ever. This was the biggest waste of time ever. So then I go out, and usually what we do is do a little training, then I'd walk out on the floor and, just see the people that were there, and I'd stop by and say, hey, that makes sense, any questions? And we just kind of meet. I'd spend maybe a half hour, an hour walking around there. This ended up being the most successful demo I may have ever done. And out of those 7 a.m. monthly meetings, this was by far the most successful. I went around. Every one of them had their paper right in front of them. They were looking at the charts because the market had opened at that point. They're looking at there and they're like, all right, is that a hammer candle? I'm like, well, it's close. Here's what it is. And, they'd say, all right, was that a bullish engulfing pattern? I'd say, well, no, but over here it is. And we talk real time and answer a couple questions. Great. Then I go to the next one. And every one of them could easily pick things out because we laid it out like we had done. And they had the paper right in front of them. So in the end, it ended up being very successful. They all very much enjoyed it. They learned from it. And I saw them actually putting things into play right after that. And what was funny for me is my initial reaction was this was a total disaster because I wasn't able to present all the data, all the information, all the visuals that I had prepared, all these perfect examples. I just had to simplify. But the reality was, because I'd done things so simply, it resonated very easily for them. It wasn't a lot of things to remember. They have limited attention spans anyways, so I was able to give them some specific ideas to think about. So what did I learn from this experience? Number one, relax. And it's so funny that there was this moment. I remember this moment where I saw everyone coming in. They all started sitting down. I just looked down at the laptop, and I remember just taking a deep breath and being like, that's not happening. New plan. Here's what it is. And I got the napkin. I just started doing it. So the most important thing was not losing my cool and just trying to, relax and focus on the moment. Just try to understand what I had planned is not going to work. I need a new plan. Let's just do this. This seems like a good one. But if I had not centered myself and taken that deep breath, that moment of mindfulness, it probably would have gone a lot more poorly. And I probably would have spent way more time than I needed to just trying to, fiddle with what was going on. That brings me to my second learning or lesson learned, which is to adapt. Had I just stuck with it and just tried to spend that 10 minutes trying to get the laptop to work, I would have lost the room. They would have left. It would have been a complete bust, and it would have been, it really would have been a missed opportunity or a disaster. So, adapting is important, right? And it's funny that I'm saying that because a lot of times when I work with investors, I teach them, try not to adapt, actually try to focus on making disciplined, consistent decisions. But that doesn't mean that you stick with something that's not working. I think what an informed investor, an effective investor does is they recognize when they have a good game plan, they recognize when plans need to change, and they learn how to adapt. And some of the best investors I've worked with are not ones that just use the same thing for 20, 30, 40 years. They adapt and they learn how the world is changing. They learn how the industry is changing, the markets are changing, volatility is changing, interest rates, inflation, the Fed, all of these things are different, market structure, and that means you have to adapt. And the successful, you can be wildly successful for a short period of time by finding something that works and riding it until it's done. But if you want to be successful over the long term, which hopefully as an investor you'd want to, it's all about adapting and understanding how your toolkit needs to change over time. And finally, it's simplify. It's so funny. I still had a 10-minute presentation, but it probably was going to be way heavier on the detail than I ended up giving them. I ended up giving people in the room a very simple message. And I think because of that, it was able to click with them. It was not hard to follow what I was saying. I gave them very clear visuals, and I gave them a self-made handout that created on the fly as I was doing it. And it worked for them. So, it's so funny after that. So those are the 3 lessons: relax, adapt, simplify. Those are the 3 things that I did that I've tried to emulate many, many times after that. And I think that last one, in terms of simplify, I learned when I was teaching that particular technique, candle charting. I always had people draw the candle patterns, because I saw from that moment, the moment they had to start drawing it, and I could easily say, nope, that's not quite it. Here's what you need to do. And they get a new piece of paper and they draw it. Once they had done it, they internalized it much more visually than if I was just showing them an example of Coke from 5 years ago and they're seeing an example on the chart. It doesn't really mean a whole lot to them. So I learned a lot from that sort of set of missteps on how to teach some of the content a little better. So that is the first of what will probably be a series of videos on lessons I've learned from spending time on trading floors, various trading floors around North America and mainly the Northeast. And this first one is really about adapting and taking what was potentially a missed opportunity, pulling out a napkin and doing what I could to salvage it. Ended up being one of the best things I had done. If this sort of thinking about decision-making, investor behavior, psychology, better routines, better processes is of interest to you, I hope you'll hit subscribe, give the video a like. In the comments below, tell me which of those 3, relax, adapt, simplify, which one is hardest for you to incorporate into your own life and why. That's it for Market Misbehavior. I'm Dave Keller. Take care, be safe. Talk to you soon.